the market's got nothing to do with me. Like, I don't get emotional about it, and that's been more of a spiritual journey than anything else. Like, when I first got given 50k, like actual 50k by someone for the prop house, my first trades, I was sweating. It was just like shaking and sweating. I was emotionally wrecked by the thought of losing their money. Between May and December, so that's 7 months, it's 57.3 as of yesterday. And if I close out now, it would be almost touching 60%. I need the fundamentals more than I need this particular trend strategy. I think I could use any trend strategy. And I've seen a lot, but I like this one because visually it just makes sense to me because I've seen it for so long.
You combine fundamentals with trend following. So I'd be interested to see how do you think about fundamentals, or what's your fundamental kind of selection box, so to speak? What do you pick from?
All right, so this is going to get us both into trouble, isn't it, really?
Welcome back to the Unpacking the Markets podcast. Now, before we kick off, can I please ask you to subscribe to this channel so that we can continue to grow and help traders worldwide? Let's get into it. So I want to start with a little bit of a controversial beginning point. So can you tell everyone what your year-to-date performance is on your Darwinex strategy?
So between May and December, so that's 7 months, it's 57.3 as of yesterday. And if I close out now, it would be almost touching 60%. So yeah, it's quite a return over the last 7 months into early December. So but that, like we were saying offline, it's a good number, and one that I had been sort of working towards for a couple of years. So I'm glad it's all coming to fruition.
Yeah, 100%. And I think it's where I want to start, because in a world of lots of marketing and things like that, the results really don't lie. And another result is your max drawdown, which was nearing 4%, right? Which I think is stellar, right? If I read it in a Market Wizards book, I'd be impressed there. So I think that's awesome. But can you take people back to, I guess, when you started, right, or how you started trading initially?
Always started from, in my head, being told not to look at my pension. Yeah. So I came out of debt, started putting some money into a pension. The financial advisor said, just put the money in each month. Here's the login. Don't ever log in. We don't want you to touch it. So I was like, okay. That was a massive flag to a ball then. I just really wanted to know everything about it. And my goal has been ever since then to get to the point of being ready to trade my pension pot once it's released. So I don't know when the earliest it can be released, but as soon as I can release it, I'm going to take it out and I'm going to look after it, because that's what I've been working towards all these years. So that's when I started. Before that, the only sort of exposure, I was financially illiterate, essentially. The only exposure I had to investing was when my sort of mum's mother died. There was a little bit of money put into some, I guess, some index trackers or something back in the day, and it grew. But actually, no, it sort of went down, so we forgot about it. Then when it came back to sort of break even, I kind of needed some money before going to uni, so I took that out, and much to my mum's sort of dismay, but I needed the cash. So like most things, if I just left everything alone, I could be retired now on the money that I would have made. So it's quite annoying.
And you wouldn't have to be sitting here talking to me. Very good.
No, like I would be talking to you, but I'd be talking to you from a very nice palatial house or somewhere else.
That's a pretty interesting I guess goal to have, right? Because most people come to trading with pretty quick goals, but if your original vision or view was that you wanted to trade your own pension, obviously that's a kind of 40-year time horizon goal from the point in university. So that's quite an interesting start, I think.
Yeah, but yeah, like I said, I went to uni, got a degree, came out with a ton of debt. It set me back financially and yeah, lifestyle. Another 10 years easily. It wasn't until I started my own business at the age of 30 that I actually started making money, enough money to yeah, like start putting savings away. So
Mm.
yeah, yeah, and I was lucky, I guess, because I started my business at 2006, so in a recession. And then when I had the money, it was basically the bottom of the market. And I guess when the guy said, "Don't touch it, don't look at it," he probably knew it was the bottom of the market. I didn't. I had no idea. Um, so yeah, when I started fiddling about with my HSBC account, which I'd, like you can go onto the accounts and you can sign up for like a shares and dealing sort of account. Yeah, my first trades were amazing, and I just thought this guy clearly didn't want me to make any money, so I'm going to try and make as much money as possible. But yeah,
Very good.
yeah, it's good.
Hmm. And was your university degree something to do with trading or markets or finance or anything like that?
No, no, I'm my brain is all about art and media. When I did A levels, I tried to do maths, physics, and art. The maths and physics, my brain just couldn't cope.
Hmm.
Yeah, it was almost yeah, like it was just a dark time. Luckily, I had art, and yeah, that's when I guess my sort of journey on working out who I am, like what my brain can do, what it can't do. That started then. Um, I've always been. If I've been told I can't do something, or it's always been something that I've tried really hard to, because I was quite disappointed that my brain, because I was so interested in the maths and the physics. Um, I find it really interesting now. I just can't retain the information long enough to get through the exam.
Hmm.
So yeah, I'd never been able to get into a banking course, and maybe now looking back, maybe I could have done something like some sort of, I don't know, economics, maybe a bit more of a business type of thing. But yeah, I went down the media route. It sort of came to me quite easily. So
Hmm.
I guess as a human, you do what's easiest. So that's what I did.
Yeah. Yeah, I can kind of relate to what you said in terms of the um, having an interest in something but not being, I guess, able to retain it in an exam. I also struggled
Yeah,
with physics, but wasn't bad at learning stuff off basically by heart without having to use like your brain. So
yeah,
I got through not understanding but really sheer memorization before I got to university, and then university wasn't so
yeah,
heavy on that side of things.
yeah. I think I'll be quite good at conceptualizing and abstract stuff.
Hmm.
But yeah, getting through the sort of book smart stuff, yeah, for whatever reason, yeah, the way I was interested, it didn't sort of translate to learning. And yeah, I've got 3 kids now, so I can see the difference between them as well. So
Yeah.
yeah, I don't think school's great for necessarily everybody,
Mhm.
but it's great for some people, and yeah, maybe teachers as well. Maybe which, since being a trader and like meeting other traders, I learned quite quickly that I'm not a very good teacher either. So
Oh,
because if I was, they'd be like able to do what I can do, and or maybe it's a human thing. Maybe people don't necessarily do it. Maybe they're more like me and they want to just do it on their own. So
hmm.
yeah,
Yeah, that's a strange thing about people is that sometimes they have to go and make their own mistakes, and they just doesn't matter what you say, they just want to go and make their own mistakes and lose their own money, and then eventually they'll come back. But
mm,
it's interesting. You talk about your brain and you being attracted to the kind of art and media side. When I had Stephen Holt on, we were talking about the importance of creativity in creating an edge in trading and thinking differently and actually thinking the same, or maybe my approach, memorizing stuff off. That all kind of reminds me a bit of consensus and what everyone thinks and wanting validation for an idea. And usually that's somewhere you lose money in trading. So in some ways, I think to have a brain that's not necessarily the status quo can be a little bit of a obviously, as you said, it can be challenging, but also can have its has pros as well, right?
Yeah, yeah. Unfortunately, because I didn't have necessarily the institutional background, that sort of support network, sort of telling you what was working, what doesn't work.
Mm.
I did go down the retails, and a lot of it is pattern recognition. With the technical analysis and stuff like that. So, humans are obviously very good at pattern recognition. Maybe I was even better than some. I'd see patterns within patterns. And yeah, I would say it probably held me back a little bit. But now, I am still a pattern trader, I guess. I've got some entries that are reliant on patterns, and yeah, I can almost, I've got 10,000 hours worth of chart time, I guess, so I can almost guess that they might turn up when they do turn up.
Yeah.
I've got some sort of idea of what to look for and where to look for it. And then if it happens, I've got the sort of knowledge to do something about it now.
And so going back to your story, so you were 30 and it was, did you say it's kind of pushing in 2008 now? And you were kind of
Yeah. So like when I was, 32, started saving, started making some trades, bought Apple. Essentially, I think I must have read something which said, buy something which you like, something that you understand, something which is disruptive in the market. That those type of sayings.
yeah.
I was the guy that was holding on to like a Panasonic telephone, waiting for the iPhone to come out, because all I wanted was my MP3 player inside my phone. So I was dead set about having an iPhone when it first came out, and then yeah, everything I used, I was in the Apple sort of what do they call it, ecosystem. All the computers, everything was Mac orientated. So yeah, it just made sense to buy Apple.
Mm.
And then once I'd made enough money to go on holiday, buy some equipment and stuff, I sold my shares. And then I did actually look, because I knew we were going to talk about stuff. So I thought, well, you probably asked me about my first trade,
Yeah.
or first thing. I looked at the chart today. It didn't really sort of make sense, to be honest, because I seem to remember buying an Apple when it was about $90. And if you look on the chart now, it's 200 and something. But there's been so many stock splits, and if you look like down to like 2008 to 2010 sort of area, it's so low down on that chart.
Yeah.
It's just like I wonder how much £15,000 might have made if I just held on to it. But
Oh yeah.
yeah,
Wow. Yeah,
yeah,
£15,000 is a
yeah,
lot of money as well back at that time, right?
yeah, yeah, exactly. But yeah, I didn't dare divide £15,000 or $15,000 by 90 to see how many shares I would have had, and then I didn't go through and see how many stock splits there's been since. So I don't know. I've got an impression it would be worth a lot of money by now.
Yeah.
And yeah, I should have held on. I should have listened to my independent financial advisor. So but I didn't.
Yeah. Well, look, I think that is kind of a weird realization about equities that probably took me longer than most to accept. I think I definitely caught, as in the fact they just go up. They go up and they go up often. I think I got.
I've got a story where one didn't.
Yeah, we can get into it. Oh, yeah, I just say that sometimes when you get caught up in trying to short equities, it's a nightmare. But when it works, obviously, it's like I think Jason Shapiro described it to me as like shooting heroin. But at the same time, it doesn't work very often, and it's not a great
Yeah,
strategy unless you have a process around it, in which case it's different. But what was your
yeah.
one stock that worked?
The one that didn't work is a company called Excite Energy, and I'd been through Shares magazine essentially,
Hmm.
and they'd recommended solar, they'd recommended all sorts of like new technologies around renewable energies. Obviously, we'd had like the wars, so we had companies going into Kurdistan, Iraq, those sort of areas of the world to get oil out. So I'd been, yeah, I forget. Gulf Keystone was one company, Excite was another, and I sold my shares in Gulf Keystone because the Kurdistan type of region wasn't playing ball or something. There was a massive oil find in that area, and I was using I forget what they're called now. It's something like independent investors or something. There's like a website where you got like a forum and stuff. So I was following people on there. So went into Gulf Keystone, pulled some money out because I didn't think it was going to be safe. And I thought the North Sea oil would be a safer bet. So I put my ISA into that, and
All of it.
yeah, essentially, yeah, all of it, yeah, and then essentially saw it go up and then go down, and there is like some red flags looking in hindsight. I was actually looking on I used to document everything as well, so there's like a WordPress site out there with my my trades and
Oh,
stuff.
cool.
So
Yeah.
so I looked at it, and yeah, I'd essentially done the technical analysis. I'd listened to everybody on the forums, and for some reason I'd put all my faith in their CEO, sort of CFO person. He's still around. His name's Rupert. Well, actually, no, I would say it's Mr. Cole. Yeah, and yeah, he said that there's definitely some upside in an interview on YouTube, in his company, and I thought, well, that's good enough. I'll ride out the sort of the retracement and wait for the sort of 10x my money, and it just went down and down and down. And then, like, looking through the forum, everyone that had sort of been sort of saying, "Oh, this is a red flag. They've got too much debt. They can't service their debt. The company is worth zero money." I'd ignored all of those sort of people because they were just seen as trolls. And yeah, unfortunately, they would have actually saved me my ISA at the time. So, but yeah, I put all my faith into somebody that had publicly said they were de-risking their sort of situation. And if I was to ever go into the markets again on the equity side, like individual shares, I want the person that's running it to be all in, or heavily invested
Skin
at
in
least.
the game, yeah.
And yeah, skin in the game. As soon as someone says they're de-risking, that's it. Like, they don't trust their company, as far as I'm concerned. But then that's something that's I've pushed down inside me, and it's my problem now. But yeah, it's just like yeah. In hindsight, it's like all these things that sort of stuck in my head. It's like, oh my god, I can't believe I've just lost all that money on the back of someone that should have known, but like how much his company is worth and how well it is doing. But yeah, but yeah, it's all there on the internet somewhere.
That's the thing. I guess, because I started trading individual stocks first, options on stocks. I bought Simon Rees like trend following course. I still am an awful trend follower. I do believe in some things, but I think it's just I really need, as in if I'm to do trend following, it has to be actually systematic, because I think I've got too much baggage for it at the moment. It's just like I'm just paranoid about every turn and twist and who's fading who and etc. So, but when I was trading single stocks, I had a kind of mentor. He wasn't directly a trader, but he was an old CFO, and he used to trade his own accounts sometimes. And he was saying, "Oh, I don't do individual stocks; they're too risky." And I was obviously brand new. I was like, yeah, whatever. This is what my course says. It's trend following. But you do forget that the individual risk of trading companies, that it's like, yeah, the macro is the macro top down, but bottom up, there's risk too, right? At the company level that people just think of.
Yeah, definitely. Yeah, it's taken me ages to sort of settle essentially on the S&P 500, well, the US 500 sort of CFD with the S&P 500 underlying. So, for me, that's probably the safest, smoothest place I can be at the moment. So, because I feel like I understand more about its functionality in the markets. Like an individual company, I'm not that guy that goes in and works out if they're going to make any money in a few years' time. But yeah, the fact that the S&P gets rid of all the rubbish each year and brings in the new blood, then I figure it's a growth function. it should just go up, really. So I'm going to hedge my bets on that. But yeah, not 100% like long all the time. Yeah, I've got reasons to be long.
Yeah. So I mean, that is kind of some of your early trades, or kind of buying companies and investing, or I guess it was probably quick enough trading if you were in and out reasonably quickly. But I guess less than a year holding period for some of those stocks you were buying, was it?
No, well, the Apple,
Yeah.
that went up relatively quickly in terms of like the money I needed for my lifestyle. I took, that money straight out. But the things like Excite, it got to a point where I did the classic retail thing where you say, this investment, well, no, this trade now becomes an investment.
Oh yeah.
I'm now going to sort of put it in the bottom drawer
Yeah.
and forget about it.
Yeah.
It's in an ISA. Don't touch it. Be like my financial advisor said, don't touch it. And then just every now and then, actually, looking at the WordPress, it went from sort of like daily sort of updates to monthly to, I'm still here, like a year later.
Oh, right.
So that's when blogging became a lot less interesting, because I essentially just had to put all my money, and I did the classic, buried my head in the sand and just hoped and prayed, and but that was one of the longest declines ever. It probably took about 2 years for the company to collapse completely.
Wow.
So it was a nightmare.
Yes,
But
tough kind of. Not, I guess you had done trades before, but kind of an initiation to trading, right?
Yeah, and the thing is, like, it sort of spurred, like that sort of period spurred me to go hunt out some actual education. I wanted someone who is. I mean, I used to live on Brick Lane, so essentially I could see this. I used to walk through the city all the time. I thought there's got to be someone who I could like talk to, and I basically seeked out information, people, companies that were willing to sort of allow me into their building. I mean, essentially I had to pay, but and at the time it was definitely like pay to trade. You pay to get the course. You get the course, they give you like essentially what you paid in an account. As soon as you lose some money, then you're out the door. But I did that. So, but I met some good people. And I learned some good things. So I was happy to be there. But I was like surrounded by financial people, like everyone I was hanging out with at one point seemed to be in the markets. So I was excited. So even if I was losing money, I knew I could make money in my normal job. So it's just like, I guess the market made me pay one way or another. So that's what I did.
That's super interesting. Because I used to live on Shoreditch High Street when I first moved to London.
Oh, sweet.
Yeah, so very nearby. But having, I mean, I guess that was, so you would just kind of find maybe prop shops and places like that would, and they'd let you maybe shadow and things like that.
Yeah, so like the first one was London Stone Trading, I think it's called. No longer in existence. The strategy that I use for my trend following now is what I was taught then. It's been in and out of favor with me, because like trend following in its nature, you need the markets to trend. There was a period of time where the market just went sideways, and I'm talking about the dollar. So if I was trying to trade the euro dollar or the dollar Swiss or any of those crosses, you need something to be moving. And for a while, the dollar kind of just went sideways. So I just thought this was a rubbish strategy. Now I know better. I should have been trading something else. It's just so that was the first one, and gave me a lot of info too quickly, probably, as a retail trader. They gave me a trend following, they gave me a range breakout, a scalp, some price action, and they didn't necessarily manage me brilliantly. They kind of just let me trade all the strategies all at the same time. And obviously you quickly learn that if you buy euro dollar and cable, you're double up on the dollar essentially. So it takes a while. Obviously like I said, I was financially illiterate really. So these sort of things, I kind of had to get burnt to realize all that type of stuff.
Mm.
The sort of the next major place which let me in the house really was probably Amplify,
Oh yeah.
and that's more recently. They were more of a disappointment, to be honest. But yeah,
Is that the as in
it's,
like Anthony Chung Amplify? No, same. Oh
yeah,
yeah,
that guy.
yeah, yeah. I see it. Yeah.
Yeah, those guys. Nothing but mad respect for them for what they're doing, but I kind of got the sort of tail end of Amplify version 0.1, whatever. It's now 2.0. They've changed the model.
Right.
So yeah, I kind of got them on the end of that first iteration, I think. Or maybe they're just not promoting the thing that I did anymore, and they're just doing it in house, and it's a side. It's like less of a thing. Yeah. So again, pay to play. So I'd been through the sort of CFDs. I've been like through trading. I've been through loads of brokers like FXCM, Alpari, IG, CityIndex. I've kind of done quite a lot on my own, trying to trade the strategy I'd learned from London Stone. And I somewhere in my brain, I just thought I need to learn how to do futures, and Amplify were kind of promoting their course and their sort of prop desk, if you like, as a futures desk. So I just thought, oh, sod it, I'll go with them, see what happens. Got a level 5 diploma. Didn't see a DOM at all. Learned some stuff about macro, learned more about how social media can help gather the information and things like that. And yeah, some sort of suspicions, I guess, were sort of realize, that they weren't doing what I thought they were doing, unfortunately. But also there was a guy called Sam North, and he was kind of head trader, that sort of level of trader. And one thing that I did take away, which I then worked on, was I put on a position, and he was the first person to ever sort of come over and say, or like online, and say, "Are you sure you want to take that position with that size?" And I kind of was able to justify why I did. And yeah, I can't remember if the trade worked out or not, but I just remember having that. That's what it feels like to have a risk manager.
Mm.
I've never had a risk manager before. I would like a risk manager.
Yeah.
I just thought that'd be so. I mean, that was the closest. When you hear like back office, front office, sales traders, prop desk, all those type of terms, having a risk manager, I just thought that's. I either need to get one, I need to build one, or I need to get a new voice in my head, which, is that risk manager at least. So I just knew, but I was, that was the big sort of takeaway really from Amplify. I didn't get to do the futures thing that I wanted to do. I wanted to learn how to use CQG and things like that, and the DOM, learn about limit orders, the volume and things like that. But yeah, it didn't happen. So I was a little bit bitter, but yeah, that one thing from Sam stuck with me, and I'm forever grateful. So yeah, maybe worth the money that I paid.
Okay. Very good. Yeah, it's a whole kind of world out there. I haven't seen like the world of those. I didn't even know what Amplify actually did, if I'm honest. I just thought they were a social media house that talked about trading. But I mean, yeah.
No, I get the impression that they essentially now they take graduates and they run simulations, and then they sort of market those simulations and students to institutional banks and stuff.
Yeah.
So I think they're kind of more of a good filter now for graduates. But when I was coming up, Amplify, London Stone were kind of two that I had my eye on. And I was all over the forums. As a retail trader, you're kind of looking for information. You're looking for how to trade and who to go with. And yeah, they were always in that sort of. There was like savvy trading. There was loads, but Amplify and London Stone, because I just felt like they had what I needed at the time.
Mm.
They're always on my sort of hit list of people to go and visit and see. And yeah, I was super happy with both of them, but for different reasons, really. Yeah. Like Anthony Chung had said to me, or said to the class, if you like, one thing which again stuck with me, and he was big on New Squawk or those type of Squawk things,
Yeah.
and back in the day, and he said that the market moved. He didn't know why, but it was his job to sort of make up a reason. So he was, yeah,
Right.
it's just like, I bet that happens quite a lot.
But yeah,
Because
yeah, it's good. It's a good point
yeah,
because, and I want to go
yeah,
back to some of the strategies you learned, but on that, like I think it was last Friday we had, a rally in the yen, and so I'm listening to Bloomberg in the morning. It's whatever 7 a.m. or 6 a.m. or something, and the headline has come out that it's Tokyo CPI is driving this yen bullishness, and I mean, yen had been rallying, since like mid Wednesday, and I was thinking, yeah, Tokyo CPI front runs Japan
mm,
CPI. Yeah, maybe it definitely helped, but is it the sole reason for this, or are you just saying that because it's a snappy headline? So it is good to be aware of, you know, people that think they know. Like the market is so complicated. It could be yen
yeah.
repatriation, it could be risk off, and so dollar yen is falling.
Could be oil.
Yeah,
Yeah,
sure.
I learned recently that oil is a major mover. So
Hmm.
of the yen because of
Oh, really?
they import their energy supposedly. So I mean I get loads of sort of sound bites that stick in my head. Nothing useful to the point where I go and investigate, see the correlation. Does oil move the yen?
Hmm.
If oil price is going up, is it dollar CAD and dollar yen doing different things? Are they going in some sort of correlation? I'd love to be able to sort of go into Python or some sort of script and then just work it out. Just is this a real correlation? Is it tradable?
Yeah.
But yeah, some people say certain things and it sort of sticks, and I just kind of believe it until after a while, it's either proven or disproven. So,
Hmm.
um, but yeah, I just think I spent a lot of time thinking that I needed all those sort of squawks and stuff like that. Um, like I said, I get the bank's uh, PDFs that they send out each morning. I've subscribed to a service where they send me that as well. And I don't know if you ever see my word clouds where I've run a script just to read all of them to find out what the 1,000 top words are.
Mhm.
And it's always rates. It's always US rates. So, you know, the, yeah, it's funny. Like all these things I used to think I needed. And I did go and try and seek it out in these places like Amplify when they're training and the other places. But yeah, I don't use any of it now really.
Well,
Yeah. I've learned that I don't need it to do what I do. So,
hmm.
or I've adapted to not need it maybe.
Yeah, and I think that's the beauty of it is that and you can sit here and say, yeah, I don't necessarily need to know the news or whatever, and still post 60% returns in 6 months, and someone else is an FX spot trader that is glued to Newsquawk, and they both make money.
Yeah.
So for me, that
Yeah.
I always find the challenge is when people come in driving one thing is the best, or trend following is the only way, or etc. Because for you, reading the news or interpreting it would never work, but you found a way that does work.
Well, the thing is, like, yeah, because like I've got a Discord channel and there's like a few people that are on there all the time. So I assume they look at what I post. And then I spoke to like a couple of them, like some people that I've been in since London Stone sort of days. And I said, "Do you ever like pay any attention?" He goes, "No, I don't pay attention to that." So, like, what? I mean, I do it for my own benefit. Like, I'm always essentially putting out the forex calendar.
Mhm.
Like, don't trade till after, say, the Fed today. Like, Powell's talking tonight. Well, in a minute or so. I'm always saying like, there's no point getting into a trending trade if he comes out and says something, it's going to reverse or you're going to get stopped out. I always try and say don't trade more than trade this, trade that.
Mhm.
So, but and then with the bank stuff that I am sent, I run the script. Every now and then they'll start talking about something other than the FOMC or the Fed rates and stuff like that.
Mm-hmm.
So when they do, then I go, okay, the market's now looking at something else. It's pretty good for sort of highlighting that Powell's moved from, say, inflation to jobs.
Yeah.
Rather than thinking that the NFP was just a dead number after. When I first started, the NFP would move the market like 100 pips or 200 pips in the euro dollar, whatever. Then the last few years, it was kind of not really a thing. And, CPI or PPI would be more of a thing, or PCE. But inflation's now switched to jobs, I think. So yeah, jobs on Friday be a good one.
Yeah. That's a great point, actually, to use those for what's driving narratives at the moment, because I think it's big money drives narratives. And I do think narratives
Yeah.
are, whether it be through people believing them or whether it being through them being true, that they do drive the market. And I find sometimes a lot of where I get my trade ideas from is trying to understand what the narrative is and then watching price react to news events. So I don't care so much about anymore, I guess, about super detailed macro stuff, which I do find interesting but not tradable. What I care about is when things should be doing something and they're not. So when small caps are being driven on a growth narrative, and then we get US jolt beating expectations, and then small caps fall on the day. That for me, I find interesting, or else frame a trade around. Things like that. I think more so than getting caught so much up in the macro detail that you forget that this is trading, and that is the market.
Yeah. Yeah, I definitely, along those lines, it's interesting to hear say like should do this, should do that, because the amount of times, like I said, I've lost more people on LinkedIn than I've probably gained, because I'll just drive home the sort of like you say, the ideology, the dogma. It should do this. We should be expecting that, and then you keep going back, going, it didn't happen. Like you're just talking out your butthole.
Yeah.
Like, and they'll some people would stick to it. It should do this. It will do that for years, and I'm just there going, no, like you can't keep moving the goalposts. Like you can't keep saying this stuff. It doesn't work. Like, well, if it works for you, then I don't believe you're trading what you're saying. You're doing the opposite. And I've really annoyed a few people doing that. But it's more that I want to learn, because you sort of hear like, you got, even on the Forex Factory, you go on the folder and it says positive number, good for, say, dollar. So is that positive? Okay, so you're expecting the dollar to go up if the number comes out this way. And like you say, if it doesn't, it's like, well, right, so now we have to get into that sort of talk of, it is priced in. Okay, well, yeah, maybe. So I was trying to say to my sort of Discord earlier this year, we're going to go into a rate cut cycle. I guess the idea is that yields come down, things like that. Wait for, and they did. They drifted so slowly down.
Yeah.
And as soon as they hit the sort of the number that they were looking for, and the rate cut came in, it just went back up.
Yeah.
So yeah, I think retail traders, and I'm hoping institutional traders, get pushed to a number, and they'll use whatever news event to get us there. I hope that is what they're doing. And I think the more savvy retail and institutional traders will know that's the kind of levels, the numbers, the times when it's going to move. And yeah, and then I'm not surprised that it's done something different to what it's supposed to do. So yeah, nothing surprises me anymore. And yeah.
I've kind of come to my own conclusion that I don't think anyone knows. I think people are managing risk, or they have different agendas. Things happen, people get squeezed, or people need to move, or people catch trends, or different people. And if they all come together on one particular reason for risk on in a certain area, then that thing goes up. I mean, I used to think that people would, that I probably used to be one of the think that there was stops being hunted, etc., which I still think they are. In my opinion, I think there are.
Yeah, there's definitely a liquidity grab somewhere.
100%.
Yeah, definitely.
Yeah, absolutely, and it is 100% deliberate, and I think it's probably algorithmic. But at the same time, it's not something I try and it's not something that kind of would block my trading or kind of adjust to it. Maybe I'll leave a little bit, but again, I'll take stop losses on ATR as opposed to whether I think someone's going to run my stop now. It's kind of it's like these ideas can block you, but at the same time, how much difference are they actually going to make to your end of year? How many times are you
Yeah,
going to get stop hunted? I guess it depends on your timeline, but at the same time, yeah, it's just something people get caught up on, and I don't think they should.
no, definitely. No, have you ever looked at Bookmap?
No, I haven't. But
Yes,
I had a guy on
no,
recently. He said he has a part of his process.
yeah. So like, I was always like fascinated. I mean, I've essentially been looking for the truth, like where where what is the truth
Mm,
essentially, and I think that came from knowing that I was financially illiterate. No one sort of in my family was able to sort of be a trader and say, "Oh, this is how you do it." I didn't really understand debt cycles or business cycles or anything like that. So yeah, I've always been like keen to like set up an account, you know, with the well, just knowing that I was going to lose money, but I had to learn something. So yeah, the bookmap side of things, I'd just always fascinated that there'd always be like these massive red lines, like a number, and it'd be like, okay, that's just filled with limit orders ready to go. And you'd think, okay, the market's going to go there, and then it didn't. It would be like another big chunk of orders like lower down, and they do like look for them. And watching that algos like push and sort of shove each other around
mm,
to get to those figures is amazing. Like for about a year I followed bookmap type of stuff, and ultimately I'm not a scalper, so I don't want to be an intraday type of trader, but it is fascinating sort of seeing those levels get hit,
mm.
and the fact that someone's put in an order, or lots of people have put orders in there to try and get the market to or back down to another thing. Yeah,
Yeah.
I'm glad that that information's out there and retail traders can see it for themselves, because it is at like round numbers. It is above swing highs and below swing lows. You know, they're there for a reason, I guess, and that's why we shouldn't put our stops there.
Yeah, 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 100%. But going back because we moved on a little bit, but the strategies you learned at, I think, was it London Stone?
Yeah, London Stone.
Yeah.
Yeah.
So
So
what kind of stuff did you, I guess, worked for you that you took forward beyond just your time there that stayed with you for your whole career?
I'm currently using their trend following strategy. So Dean was the head trader. I believe it was him and his dad that maybe come up with this strategy. Um, yeah, if he's watching, thank you. It still works. I used like but it took me a long time to work out how to make it work. Um, with the Darwinex account, I use fundamentals. Well, I believe they're fundamentals and technicals, and that took me a long time to get that in place, and mainly because like Dean, the sort of head trader, I'd say, oh, there's a trend line coming, down. I don't think this trend's gonna go anything beyond the trend line type of thing. And Dean would always just say, well, the strategy doesn't know there's a trend line there. Just hold it. And then with it being a trend following strategy, there's always some sort of reversion to the mean. Like there is always a pullback. It doesn't just always go straight up. So I'd get really frustrated that when I was getting stopped out, I was getting fully stopped out. So I've always been trying to tweak it, but I've got to a point now where, like I say, the fundamentals and this trend following strategy. The trend following strategy is essentially for timing. It's I need the fundamentals more than I need this particular trend strategy. I think I could use any trend strategy,
Mm.
and I've seen a lot, but I like this one because visually it just makes sense to me because I've seen it for so long. Um, but yeah, I think I could probably do a moving average crossover and win as long as I had the fundamentals and it was all in line with each other.
Mm.
And I'm more comfortable with it as well because I've also got I'm trading for a client, their money. the only stipulation they've put on the account is I'm not allowed to close out a trade just because it's getting towards month end, because I get paid at the end of the month.
All right.
So they don't want me to like cut a trade. But obviously the idea is to make money, as much money as possible. And I've been short pound yen and dollar yen. And like you were saying earlier, I have no idea why the yen's rallying. All I know is I've got a trend following strategy, and I'm going to try and stick with it as long as I can, because I think if the pound yen goes where I think it's going to go, based on where the next big sort of daily swing lows are, then that'd be awesome. That would be a great way to make some money. But today, like the dollar yen, well, no, actually it started yesterday. The pound and dollar yen, started rallying.
Mm-hmm.
So because it's not my money, I basically got to break even on the dollar yen. Got stopped out today. I had a better entry on the pound yen, so I'm a lot higher up, and I don't know, has it gone down yet? It's like I was watching it earlier, and it's like coming back down. I was like, oh, yeah, and so yeah, it's a trend following, and yeah, I don't have as much faith in this pound yen as I do the US 500 going up. But it's because I haven't got the fundamentals, backing me up now on this yen trade. So, but yeah, it seems to be staying okay. So, yeah. So yeah, the fundamentals, give me a lot of confidence for this trend following for the S&P 500, and I guess that's why I can get in. Yeah.
Yeah. But sorry, I was just going to say that's really interesting comment. I think number one, because there's so many people swear by, I guess, one or the other fundamentals or technicals, or say trend following is like a religion. I feel like I've insulted trend following like once or twice, and I've gotten like my head taken off on LinkedIn. But it's interesting you say that you combine fundamentals with trend following. So I'd be interested to see how do you think about fundamentals, or what's your fundamental kind of selection box, so to speak? What do you pick from?
Right. So this is going to get us both into trouble, isn't it, really? Like I said, like everyone just thinks I'm an idiot. So and I haven't been proven wrong. Like the thing is, like, maybe we can work through it together, and then if you say, Neville, that's wrong, then you can tell me why it's wrong.
Right.
But I essentially go with the fiscal flows from the US, which is why I only trade the US 500 or S&P 500. So for me, the flows are, well, I publish them, don't I? So I published the fact that on Friday the 29th of November, 361 billion was pumped into the market. And then the sort of average over 20 days of taxes, it's been falling for quite a while now. So for me, there's like more money going into the market or into the economy than they're pulling out. So whilst there's deficit spending, I feel the market can go up. And yeah, that is, basically the fundamentals. I need to see that there's more money being pushed into the system than they're taking out. And there are times when they take out a lot more than they pump in, around April, September, those sort of quarterly sort of tax drains. And we've got a tax drain coming up in December. And I don't know if you read what I wrote earlier, but it was on the 29th, is Friday of November. The 1st of December was on the weekend. So they put more of that sort of first of the month payments, the sort of money that they put to the veterans. There's, some social security, some, all the different places where they pump money in at the beginning of the month.
Right.
They had to put it in to the end of November. And so get the data yesterday before Monday, so it's always a day lagging. And there's only like 78 million in deficit spending, so it's like right on the sort of borderline of it's basically zero. But for me, they put more money in. It's like they shoved it into the end of November. So yeah, the fact they put a lot of money in at the end of November, I think, I'm hoping that that sort of translates for December as well. But the trigger is once the deficit and surplus sort of column on my sort of little grid that I make, if that goes red, even if the technicals is saying go long, I can't. I have to wait. I have to wait for deficit spending to definitely be coming back in, and I need technicals to sort of say that they're bullish as well. So yeah, I'm quite strict now on that. Whereas before I might have trying to fudge it in my head, like, oh, they have put more money in and the money's there in the system. But yeah, no, I wait for my little matrix to sort of go green for fundamentals and technicals, and then I'm looking for a long. If they're both red, I'm looking for a short. If they're green and red or in between, then I do nothing. So my actual trading, we were talking about earlier, there hasn't been a lot. And, in those 7, now 8 months, 51 trades, but some of those trades were partials as well. So, we're talking, well, it's a long way off for what I used to be. A couple of years ago, I used to do like 10 trades a day type of thing. Now I'm doing maybe 1 or 2 a month, really. Because, yeah, like I said, I probably, a lot of those trades are partials or break evens where I'm trying to get in on a good level. Yeah, that's my fundamentals essentially. It's deficit and surplus spending.
Yeah.
And then just monitoring the sort of tax drains and the quarterly interest, payments and things like that.
On the fiscal flows, because I don't fully understand the actual mechanism of how it works, right? So when you say there's, say, for simplicity, 10 billion flowing into the economy, is that via? So you say it's via the treasury?
Yeah. So like I said, I've been like looking for. I'm over opinions now. Like everyone with an opinion can go do one. What I need is actual physical data, and the technicals to just stay technical. So the US, as far as I can tell, are the only ones that on a daily basis open up their checkbook and say, this is what we're spending and this is what we're bringing back in via taxes. So I go to that statement and I sort of rip out all the bits that I want or need to work out how much is net being pumped into the economy, and or vice versa, being taken out of the economy. And because it's like, it's a lot of it's quarterly in terms of like the drains, big taxes, like around April, May, September, December, those type of things. You can sort of see it on the graphs that the data sort of produces that it is cyclical. Interest payments from their holdings of treasuries and stuff. You can see that being pumped in. So I track that. You can track everything, like the amount of money that they're putting into Department of Labor benefits or the Social Security benefits. All those sort of. For me, they're the only ones that can create a dollar. Essentially, in terms of new money, like you can go to the bank and get credit. You can like generate a loan, through the bank, and as soon as you pay it back, that money's disappeared out of the market. But you still need to have found those extra dollars for the interest payments. So it's like, where do all those new dollars come from? And for me, it's the sort of the deficit spending. The Americans each year come up with a budget, and then they kind of tell you what they're going to spend their money on generally, and then they actually produce the figures daily so you can track it. So yeah, that's what I do.
Well, yeah, I love it anyway. I think it's an awesome idea. and most importantly, it's yielded quite significant results, right? When the government is kind of printing and putting a lot of money into the economy, you track how much money is going in and coming out.
Yeah. So on the dashboard thing that you sort of like the matrix I made, I'll watch the sort of headline number essentially. So Friday, 361 billion, Monday, 78 million. So massive change like between the two. But like I've explained why. So at least I got an idea why there's less money on Monday, the 2nd of December, than there was on Friday, the 29th. And if the flows are going up, then I know that they're spending more, like on average. So I do like a 10-day moving average and just watch that kind of heartbeat along. I watch the deficit and surplus sort of totals go up and down. So back in, when that being August, like late August, they got up to like just over 300 billion, and then by mid-September, early October, they were down to minus 100 billion, and then it went back up to, like I said, the end of November. And yeah, the stock market has kind of gone up and down along those lines. And like, it's not like the more money they put in, the more I'm gonna go long. I have to wait for the technicals. So, like I said, if the fundamentals aren't showing money going into the economy through deficit spending, I'm not going to go long. I have to wait for both of them to sort, the trend breakout to occur with that sort of cushion. I call it a cushion. I'm just expecting like a big inflating pillow or balloon underneath the market, just lifting it up. And if it hasn't got that, then you can have those sort of moves down quite severely. And if they're actually physically taking money out, I'm kind of expecting the market to come down. And if it grinds higher, then I'm missing out because I'm not trading. I need the two to come together, and then I have confidence. Like I said, with the yen pair, it's purely technical, and I'm just relying on the strategy to be a technical trend following strategy. With the deficit spending and trend following strategy, I just got so much more confidence. And if I see it, like yesterday, we had a dip down. I knew there was money in the markets, in the economy. So I just waited for the pattern on an intraday sort of level to occur and bought the dip. So I essentially bought the lowest. Well, I kind of second guessed myself a tiny little bit, so I didn't get the low. But as soon as it definitely confirmed, I was in. And like I said, I'm again up a decent amount today. So I feel that it's given me the confidence. And I watched it for 2 years. Like I've obviously started, when did I say May on the Darwinex thing? Yeah, so I sort of funded an account in May. I'd been watching it for, probably August 2022. October 2022 came. I said, buy the market. I sort of basically called the market as the sort of surplus came back in, like deficit spending, sorry, came back in. And then almost to the day, I can tell you when I would have bought. And then I started doing the sort of forward testing, like technically. And then after 2 years of talking, I think do you know David Bell? He's on LinkedIn.
No, I don't.
Yeah. So like there's a guy, David, for whatever reason, he sort of said to me, does this work? We've tried to, you keep banging on about this type of thing. The money flows, and I thought, okay, I'm gonna have to prove it now. So, he said that the quants couldn't make it work, so I just did it. So I guess I'm trying to talk my own game now. That's what I'm doing. Like I said, as soon as someone says either it doesn't work or you can't do it, then I go all in. So that's what I'm doing. I just want to prove it.
Yeah. Well, yeah, I mean, I don't know how much more you can prove it after this year, but it's pretty. I
No,
think it's
it's
pretty clear right now.
well now I'm more excited because like I've been saying, like I'm waiting for the cushion to sort of fill up underneath the market with all this money that they can spend. And over the last few years, it's kind of been like 6 to 7 trillion. So the money's got to go somewhere. Um, yeah, obviously they take money out through taxes and stuff, and you're left with a net 1.2 or whatever it was. I forget now. But yeah, if you've got a new administration, new policies, new ideas, and the sort of general chat around deficits, debts, surpluses, and things like that is moving towards like they need to like get a handle on this 36 trillion.
Mm.
And I kind of like if I'm right and these flows in and out of the markets are what either drag or push the markets, then I kind of need to see the opposite side now. I've seen like a
Yeah,
October 2022 to end of 2024 bull market, and yeah, maybe I was lucky. If they pull the money out and we go into surplus spending or surplus, like markets, then what I need to see is the market come down, because then I've seen it both ways.
mm.
Yeah, so
Yeah,
I don't want a recession or a depression.
yeah,
um, but at the same time, I kind of need to see. I need to prove to myself as well as everybody else that these are the sort of drivers of the markets. The money from the government spending, I believe, goes somewhere. I believe it goes to the companies. It doesn't go to everybody, obviously. It goes to like a certain amount of places. Um, but yeah, I think the economy drives the markets. So I kind of need them to pull that money out. I need the market to change its sort of paradigm, and I need a recession or a depression to unfold and for me to go short all the way down.
mm.
That's what I need to prove it, really. Otherwise, yeah, otherwise maybe I'm just lucky, but I don't think so.
Could you prove it historically, as in a previous recession, or does the data go back that far?
All right, so I used to track it monthly, not daily.
Mm.
And yes, you can go to the sort of API and you can sort of drag out a lot of data, but they do a sneaky thing where they change some of the headline sort of titles. So what might have been called let's pick one, uh, general account total withdrawals. It might have been called general account dash total withdrawals. So you get like these gaps in the where they change the sort of name of the tab, I guess,
Okay.
and that's really annoying. So I've only really got, actually I can tell you because I've got it in front of me. I've got like a continuous from 2005 in terms of the flows. So that's from sort of June 2005,
Mm.
and like during the back testing, I kind of did go through and yeah, it is. I think it works, but I kind of need to do it in real time
Yeah,
now.
yeah, sure.
So you know, I need that track record. So the first 18th of January 2022 is the best sort of signal I've got, really. And
Mm.
there was times around April 2022, September 2022, those sort of tax sort of periods where it goes into surplus spending. There's also the times when there was loads more tax being taken out. After COVID, everybody being like had their bank accounts pumped full of money. Loads of people didn't do anything; they sort of saved and saved and saved.
Mm.
And then there was like a real big shift towards taxation in the US. So there's like a massive like overall tax drain, and the market came down. So that was kind of my uh, sort of proof of concept that when they take out a lot more money than they pump in, that we should go short. And then, like I said, there's that sort of paradigm shift again around October 2022 when everything started aligning in terms of popping up. And you can see it, like when they shut the markets down and there was essentially like a little mini sort of credit crunch. As soon as the Fed came in and said they were going to pump the markets full of money,
Yeah.
the US Treasury did start doing it, and then that's when we had the massive rally. So
Mm.
I think historically, I've kind of seen enough now.
Yeah.
I've seen credit crunches. Like I said, like I started a business at the back end of GFC, and like you'd know where it is, but like in Spitalfields, there used to be an estate agent, and I remember going in there asking for a mortgage, and they said, "Okay, we can give you like 8 times your wages to get this through." I was like, "I'm pretty sure my mum said 4 times your wages is kind of like the normal. Eight times, This is like when you could yeah, basically just try and fudge the market and of like self forgot what the words were, but yeah, they were going to give me like 8 times my wages, and it sort of just put me off. But then in the sort of media, there's always talk about like credit crunches and things like that, and I do believe like when there's no sort of flow of there's no sort of money moving around, then that's the problem. That's when the markets like fail.
Mm.
So for me, yeah, surplus spending or deficit spending is money going in, and surplus is when they've taken more out. So it kind of makes sense to me.
Yeah. Yeah, I think I know you mentioned before we started recording that you publish this on LinkedIn and you get some backlash. But for me, it's not. Uh, and I would give backlash to an idea I didn't think made sense. But when we talk about credit and money in the economy, especially the U.S. economy, where everything's about stocks, in the U.S., it's like I'm American, I trade stocks, or my pension is stocks, and
Mm.
for me, excess either credit or direct liquidity into the market definitely will support asset prices. So I think the foundation of the idea is pretty solid. I don't know why you would
Yeah,
question.
but I think like I wish I could call him out, but he's blocked me so hard
Oh,
that he wouldn't even like hear it. But yeah, I mean, I used to like publish like all of his messages to me and stuff because he was like, I like being challenged. So I was hoping that you'd say, no, you've got that wrong, and this is what's actually happening. But um, uh, yeah, like you hear people say, like back in the day, quantitative easing is going to be hyperinflationary, and then you kind of like, I don't know what those words mean. I've got an idea, but I haven't really like dug into what QE is or who come up with the term, or you just people are talking about it,
mm,
and then inflation didn't arrive, and then you're looking around the sort of world and people are talking about interest rates. Like one of the things on Amplified, the trading course, it was like inflation rate, um, interest rates are used to sort of control inflation because if interest rates go higher, people are more likely to save. They're less likely to go and buy stuff and things like that. And yeah, I think sometimes it works and sometimes it doesn't. Um, and I just don't think you can sort of say with absolute
mm,
um, like conviction that this this mechanism is going to do something, which is why I'm always like trying to work out where I'm not seeing the surplus deficit thing. Like there must be like a blind spot somewhere, but I haven't found it yet, and it's been a couple of years like in the making. So, like I said, I kind of need to sort of test it on the way down now, just to see if there is a blind spot somewhere. And that's why I get blocked because I'm always pushing hard like my idea if someone's got the opposite view.
mhm,
Like if someone said it's going to be a recession because of this, and I'm like, no, it's not because they're spending more. They're like, no, it's going to be a recession because of this, this, and this.
mm.
I'm like, they're spending more. It's not going to be a recession, and it doesn't materialize. There is no recession. So I'm blocked before I can go haha or whatever.
But I mean, to go
Mm.
back to your point on when you said deficit spending and surplus spending. So is your idea that when a government gets into a surplus, they spend less and rely more on the economy itself to produce the surplus? Or
Yeah. Yeah, so I think for me, like it's just the nominal figure. If they've spent a gazillion pounds or dollars into the economy, but then taken double out in taxation for whatever reason, to me that's just going to contract the markets. There's going to be like no movement of money flowing around.
Yeah.
Like everyone's going to be like worried that they can't pay their next tax bill. You know, people lose their jobs, businesses fail, things like that. That's what I believe. So I don't know. Like I said, like if they do take 2 trillion out of the markets in 2025 through this Doge, Department of Government Efficiency, if they stop taxing people to the hilt as well, then net
Mm.
maybe there'll still be like deficit spending. I don't know. But yeah, they might have saved 2 trillion, but they may not have. Yeah, they might destroy 3 trillions worth of taxation as well by simplifying the tax codes or getting rid of income tax across the whole of I don't know.
Mm.
But luckily they tell you what they're going to do, and then they actually publish the data daily. So if the number is not positive in my eyes, like if it's not deficit spending, that's another thing. Like I think that's positive, so I label it green.
Mhm.
But to a lot of people, deficits would be like red,
Yeah,
like
yeah,
bad.
that's where I
Yeah,
think
yeah,
I think I'm getting thrown, because when you say deficit spending, it means net positive amount of money the government's putting into an economy. That's what you're. Yeah.
that's what I think.
Mhm.
And when they say balance the budget, like they say, oh, Clinton balanced the budget, but then, I mean, there was like a internet bubble thing as well, and but I think if there's money being pumped in, and Clinton say doesn't balance the budget, maybe if there was like more money just being shoved in, yeah, maybe that bubble would have got bigger and bigger and bigger, and maybe I don't know. Everyone seems to be like super super worried, and this is why I get a lot of like pushback. It's because I don't see the problem in more money coming from the government and being put into the economy. And lots of people are going to say, "Oh, that's what causes inflation, and that's what's bad." But you know, the money that they're putting in is like social security. Like those people need the money. I'd imagine. Like defense, maybe they don't need to make so much spending on defense, but they do spend it. So companies receive the money, employees receive the money. Yeah, I don't want to sort of say I think it's spread evenly between like the poorest and the richest, because obviously it's not. But I don't think the market cares as a whole. The market just wants to sort of see more money going into the economy than being pulled out.
Mm.
I mean, that's kind of my whole premise, really.
Yeah. Well, I think that's yeah. I mean, yeah. It's like I like when you said net there, as in so that you look nominal net. If we're pumping more money into an economy, it's a fundamental signal, kind of risk on, and if not, then it's a risk
Yeah,
of.
it's definitely risk
Yeah,
off. Yeah,
I think that's
yeah, and yeah,
yeah. So I mean, but you also mentioned when we were going through that the technicals have to be right too, right? So what do you mean by
yeah.
what kind of technicals do you look at?
So for me, a trend following strategy starts with a breakout of some sort. So some sort of volatility breakout. So I need to see it like jump over a line essentially. So I use an envelope. Um, if anyone goes to LinkedIn and sort of looks through, they'll every now and then they'll see a post where I've got like a blue sort of channel. If price is above that channel, that means it's kind of pushed beyond the sort of volatility, the usual
Mm,
volatility, and a trend may or may not come after that.
yeah.
Um, so it starts with that, and then
Is that, sorry to interrupt?
and
Is
then
that like
they're
is
gone.
that like a Keltner band type channel, or is it, do you have your own bespoke type?
No, no, no. It's just a basic moving average envelope. I do believe, like I said, I think if you chose any trend following strategy, so whether it be like Bollinger Bands, Keltner Bands, um, what's the more sort of turtles one? Um, I forget what it's called, but yeah, anything where there's like a deviation from the mean of X amount
Yeah,
and price can get above it,
yeah,
then you can go long. That's the sort of the sort of the setup. The trigger is if price gets above that high. So there's like an idea that the candle or the bar or whatever, or the close gets above that sort of volatility band, and then I wait for a little bit of confirmation, I guess. I wait. The trigger is we're going to get a new high. Yeah, so many times I've tried to sort of wait for the previous day's high to be taken and then short it back. You know, I've learned over the years that you buy high and you sell higher.
Yeah,
that's the way I look at it now. And if you're talking like daily time trend, yesterday I waited for the initial balance. Do you know what that is?
this is
What that? So
it's what's it called?
well,
The initial balance. I know the term, but it's what's the methodology?
for me, it's the first hour of trading from the US Open. So when I used to like do Top Step and things like
Sorry,
that,
but it's market profile, is it? Is that where that comes from? Initial balance.
I think a lot of that sort of terminology does, yeah. So
Okay.
sort of opening range, initial balance, that type of stuff, I believe is the first, like set of letters. So it's A and B, I guess.
Yeah.
And then so that's the thing, like because I didn't do the futures with Amplify, I went with TopStep because that's all futures, and I learned as much as I could about futures and DOMs and their terminology and TPOs and different strategies that you need to use with. For me, like futures is highly leverage. Like it's madness. Like I was trading TopStep during say COVID times, and TopStep had a policy where you could not trade if the market got close to a 3% move on the day, but you could, like during COVID time, it's like limit down pretty much like every day. So if you got in, like it was ridiculous. You could like do $10,000 in a moment's notice. You put 3 lots on the ES or whatever, and it's just absolute gambling madness. And I'm glad I'm not doing it now, but it's just like seeing how the market worked. I didn't even know what I kind of knew what limit down was back in 2010. I'd been sort of sucked in by the adverts on the tubes and around Liverpool Street Station with CityIndex. Do you know CityIndex, the broker?
I've seen them online and stuff.
Yeah. So like I got sucked into that brokerage, and on 1 May, I don't know what day it was, but a day in May, there was like the Dow Jones just dropped like 700 points, and I saw my account go up and up and up and up and up and up and up. I was like, I've made it. Just like I can retire. And then I tried to close, like you sort of see the sort of move, the flash crash, if you like, stop and like peter out. So I went to close the position, and I just couldn't close. It's like I can't close. Why wouldn't it? Like,
Oh no!
And then it went all the way back up to my stop loss, and then I stopped out. It's like, something just happened. Then what happened? Just like I saw all the money in the world, and then I'm out for like my how much I was willing to risk. So I've seen volatility before, but Top Step during COVID times was like, you can't trade if it gets close to 3% on the day move. Because they've obviously been through it all before, and I like my trend following now because it's the fundamentals I believe are going to sort of lift the market eventually. And if I see something like an initial balance form, and then they sort of dip out of it and then come back in, I'm aware of it on the sort of shorter time frames if I'm looking for buy the dip. So the initial trade I started was on the volatility breakout. Then I watched it come back down, and then I saw an opportunity to get long, and then I basically scaled out the first position because that was higher up, and then it sounds like I averaged into a loser. but the first initial one was like a very small size to start with a maximum of 4% drawdown, and then, like I said, I was pretty confident yesterday, so I waited for buy the dip, got in with a bit more money, and then de-risked the first one and got to break even, and it hasn't come back down since. So I was glad to have those sort of experiences with TopStep because it was so fast moving. And the way that they sort of tried to keep changing their policies of how to get more consistency, I learned a lot of intraday techniques, which I can now implement once a month, like if I need to get into a position. So yeah, I'm grateful for that experience.
But overall, it's like you get a fundamental indicator or signal. You wait for a kind of breakout, maybe on the daily above your channel. What is a moving average envelope actually?
So my understanding is it takes a 1%. Oh well, you can set the what do they call it? They probably call it a deviation.
A standard deviation, is it?
So I'm gonna tell you what it is. So I coded it for TradingView as well, and then I posted it on TradingView, and then I hate TradingView people, sorry, but they were like, you haven't like described it properly, you haven't done this. I said, look, I just wanted people to have it, like if they see it on my charts, they can just grab it. But the moving average envelope deviation is like set to 1% away from, I guess, the moving average. So the moving average would be 25 period moving average set exponentially or whatever. And then for the daily, if prices moved one deviation away from that, 1%, I guess, deviation away from that, and closed above it for longs, then I'm thinking, all right, that's the setup. There's been enough of a move away from the mean as I look at it. And then that's a signal that there's been some sort of interest. And from then on, it's kind of looking at, another sort of bunch of indicators, but really it's just like essentially a moving average crossover type of scenario. And
on a lower time frame or something like that.
No, it's all on the daily. So it's like, so I'm a great believer that if you analyze the market on a time frame and you set a sort of position on a time frame, then you manage it on that time frame.
I agree.
So if I was to go down to, so daily is the strategy, that's the strategy, but I might go, like I say, intraday to get a more precise entry point if I feel like I'm looking for buy the dip. And there's just been some sort of news event which they've used to grab that liquidity, and I learned that from the sort of the one and all retail guru that we all know about. So fair play. Like you talk with something. So I'll take what's useful from as many bases as possible. So
I was just going to say that kind of going back to what you said then about initial balance, I think is quite interesting. So then when you're on the daily, you're looking for to kind of finesse an entry. You wait for that initial range or hour to form, and then if you move out of it, then you
So if you were to tap into the top step traders that were trading yesterday, or futures traders on retail platforms, they got chopped up because they were trading within the initial balance all the time. So the market didn't really move, but having, like I said, looked at the futures, there's generally there's a period of time where the market then moves to the level out of the range, and it goes to a specific level, a predetermined one. Bookmap would be the sort of place where you'd go to sort of see where they're going to hunt for. But I don't do any of that now. I just have, I guess, an an intuition, if you like, that I see a certain thing happening in a certain market environment, and I've kind of seen it enough times now where if they can't make it go lower than that initial balance and I test some other liquidity sort of pool somewhere else, then I'm just waiting for the sort of I don't know how to explain it, like a range, a dip down, a pump back up above the range, come back in, and then off.
Yeah.
That's what I'm looking for. And if the market can't prove it can go lower than that zigzag second zig low, then I'm just if you can't make it go lower now, then there's not enough sellers essentially. And then I'm quite happy to buy on an intraday because I can get my stop really tight. So where I had like the really small position on the sort of daily time frame, I had the stop at 4%. I was able to get 4% again, but with 4 times as much size because the stop was a lot closer. And if I get stopped out, then I've risked 4% max, and I haven't been stopped out that often. And if I am stopped out, it might be on a break even. The market moves away, then it does that sort of mean reversion thing because they've just expanded the range, and that's annoying. Trend following definitely needs momentum. So, but yeah, generally, if there's signs of momentum, then the market's proven itself to be kind to me.
Yeah, that's great. So is your kind of risk management or position sizing around 4%?
Yeah. So the good thing about Darwinex, I've known them since they were Trade Slide or something. I used to use them for analytics. They've always been really open, really approachable. And one of the guys came on LinkedIn and sort of said, "Oh, hi, how's it going?" So I sort of said what I was trying to do and then tried to work out how Darwinex works for maximizing potential allocations. I want it to look as good as possible on Darwinex because in the past I haven't looked that good. I've had massive drawdowns and big P&L swings, so I just want to try and make it a lot smoother. And he said to reduce the risk by as much as I could, and then if we're talking like my sort of fault still, I'm still trying to get the monthly allocation. I like the idea of having the 30,000 euros allocated to me on a sort of monthly basis. So they do a little bit of gaming, I guess, where they sort of show your position within the sort of scheme of things. So out of 7,000 traders, if I can get into the sort of top 10%, I'm happy about that. Yeah. But it does mean that maybe I risk a bit too much still, just because I'm trying to get that allocation.
Okay.
And they pay as well. So they give you performance fees and stuff. So it's another way of making money.
Yeah. But I mean, that on the point of allocation, or not allocation, on size, I mean, traditionally 4% would be seen as quite a high position size. But the more, it just depends who I talk to. Like I talked to Simon Ree, and when you go by the 1% rule, he's kind of like 1%. If it goes your way, if it doesn't go your way, you make what, 2%. He's like, I tend to range between 1% and 5%, and then we could talk conviction, which is a controversial topic as well. But I found in my own trading there is just there, especially when it comes to scaling into positions. There needs to be a little bit more thought than just shut down and say 1%. I think.
But so going back to the first sort of lessons, if you like, by London Stone, Dean said, if you make 2% a month, people are going to be really happy with that, and they'll flock to you with their money and say, "Please trade my money." So that was always in my head. And then the whole sort of retail landscape. I've done loads of stuff for brokers where I'm doing like training videos and content for training and things, and it's always like risk 2%. But then like one day you just sort of say, well, who decided 2%? And then there is a reason why you risk a little bit, because it's a lot easier to get back. Once you start going down to that dark hole of 25% losses and things like that, then it's so hard to get it back.
Yeah.
But I don't know who made up the rule that it had to be 2%. I'm just very aware that as long as I've got like a hard stop at 4%, and like I say, I want the market to prove itself. I am watching the market in the initial stages. If it proves itself, then I can relax. And then the idea is it disappears because there's volume and volatility and momentum and stuff. And I've got the 7 trillions worth of spending going into the market. So, I've got like ideas of where it should go and where it shouldn't go. And if I don't see it going where I want it to go, then I'll get to break even as quick as I can, and then take like I said, I got stopped out on the dollar yen today because I just didn't want to lose the guy's money. So, I've got him in the back of my head. But the guy said to me, like, just don't lose 15%. After 15%, it gets a bit awkward. So, as long as I don't lose 15%, I'm good. I can size it however I want. But because he hasn't given me like a specific, like per trade, I'm actually quite cautious.
Yeah.
It's like, yeah, I was like, okay, he's very good about 15% overall, but yeah, he hasn't really he just says make as much money as possible. So
Oof.
I do that.
Yeah. You got. I'd say push him on some kind of a. I mean, if your solid risk target is 15%, then that's fine. Your returns, you can't. I mean, risk target and position sizing are probably the only two things there you can control. How much money you make is
Yeah,
not really for you to claim.
that's it. Yeah. But then, like, with the whole top step and that type of stuff, they say you get like I don't know, 50K or 150K account,
Mhm.
but then the risk is really what the trading account size, isn't it?
Yeah.
As soon as you lose that risk, then you're out. Like, you've got to sign up again.
Yeah.
So I'm quite happy to trade small account sizes with a lot of money in terms of like position, like relative to the amount of risk. I've got enough. I don't know, what is it like? Callous. I'm scarred.
Yeah.
The market's got nothing to do with me. Like, I don't get emotional about it, and that's been more of a spiritual journey than anything
Mm.
else. Like, when I first got given 50K, like actual 50K by someone for the prop house, my first trades, I was sweating. It was just like shaking and sweating. I was emotionally wrecked by the thought of losing their money. And now I'm not oblivious, but I'm a lot more relaxed. So I can, yeah, but yeah, I say it's more of a spiritual journey than a trading journey. Like, mentally, I'm just stronger. So it's good.
Yeah. It's such a humbling sport, such a difficult sport. Like, I mean, you've been in it for quite a while. The people that last come out the other end, just everyone I met in this kind of big transformation journey, personally as well. You said spiritually. It's so true. It's like, I mean, to deal with rejection potentially every day, you know, indefinitely, can really make you,
Yeah,
and all the self assessment and self awareness and self reflection, all that kind of stuff. That's hard. That's hard, and it's the hard stuff I
yeah,
think that really changes people. You know.
yeah. I think, like, because like I said, retail, sat here on my own, talking to myself or chatting with random people on the internet. You're trying to like find ways of navigating the markets, and finding a strategy is super easy. That's easy. Finding some fundamental reasons is quite easy. But then I found myself, like, I don't know, maybe reading Mark Douglas or something like that, and then stopping at traffic lights, waiting for the green man, just thinking that's risk. That risk is moving across the sort of crossing whilst the traffic is still flowing. You start like thinking differently about your
Mm.
life, and I think trading has definitely sort of shone a light on all of my faults, and it's still a work in progress, but I'm in a better place. I'm more adaptable, and I'm able to sort of receive information and use it to benefit myself. And yeah, trading's just, it was, if you're being greedy, it will tell you you're being greedy. If you're being impulsive, it will show you how you're being
Mm.
impulsive. It's just always. I used to hate the sort of, oh, why did I do that? I know I shouldn't have done that. So all of those sort of retail or maybe even institutional sort of internal monologues. This is dialogue, really. You've got a two-way conversation going on in your
Yeah,
head.
yeah.
Like, why did I do that? I'm not supposed to have done that. Well, you did it. Like, I mean, I've done therapy. I've done all sorts, like trying to work out my psyche and develop some sort of consciousness, really.
Yeah. And you made a good point there. It's not just retail; it's institutional too. I had Stephen Goldstein on, who works with a lot of high performing traders or people that work in hedge funds, and I was kind of saying, sometimes institutionally or institutional traders, I had the opinion before I started that they were these kind of esoteric figures that are infallible and they always make money and stuff. And he was saying, yeah, no, they're not. They're just like you, and they're all susceptible to human issues because you never stop being human. And I thought that line was just
Yeah,
so powerful. It's like, yeah, we don't ever stop being human. So of course these things are going to happen to us. Doesn't mean we're bad people or we're any worse than anyone else. It just means that this
yeah,
game will find any little thing you have and maybe press it until it
yeah,
hurts. Yeah,
definitely.
until you fix it.
Yeah, yeah, like, um, yeah. I had the same sort of view of the sort of bank traders and stuff, and then I met a rogue trader.
Mm,
It's like, all right, so you are really, really smart, and your brain screwed you over.
yeah.
Like, he was so smart, he thought he was too smart, I guess. But yeah, he was like a sort of a dad friend type thing,
Mm,
and yeah, it was just interesting to see. Okay, he's a really nice person. A really nice human, a very clever person, and then still um, made some poor decisions, I guess. And I used to hate the decisions, and well, my brain still does it. I was spending the money yesterday that I was going to make from the dollar yen. I was already living in that sort of fantasy world, going,
mm,
okay, by the end of the month I'll be able to do this. I was envisaging being up 10% by December. Yeah, the end of December. I'd already gone into that sort of fantasy realm, but I'm now aware of it,
mm.
and I'm not. I'm not. I mean, yeah, there's so many things I've had to work through, but it's just I feel happier about myself now, at least.
Yeah. Yeah, I think that's such a powerful thing to say, that you're aware of it. I think it's the awareness can bring so much change just in itself. It doesn't mean, if you can't stop a thought, but you can watch it. You know what I mean? So I think that
Yeah.
is the such a big key for people when they start becoming self-aware. But you mentioned some of the faults you struggle with. Are you comfortable sharing maybe one or two of the faults that that hit your trading the hardest, or and how you kind of got through them?
So yeah, like, I mean, I used to have. Are we allowed to swear on this?
Yeah, yeah,
This is
sure.
yeah. Like, no, like I literally went to like therapy and said, "This is me. Like, I'll get to a position where, like, in life, not just trading, but just generally, where an opportunity will arise. I'll question myself. I'll delay the action, and then for whatever reason, I'll just say, "Oh, fuck it." And it's like, "This is my fuck it button," and I'd press mentally that button, and I'll just go in, even though I knew that the outcome was probably going to be detrimental to my life or my trading account.
Mm,
I was just like, why? And the therapist couldn't answer the question. They tried all sorts of different sort of ways of getting into my subconscious and like reprogramming me and things like that, which is great. It was a great experience. I'm glad I did it because it worked for other areas of my life, but I could never get out of that sort of mode of, I guess, silly
mm,
mistakes. I knew the process, I knew what I should be doing, but I'd be staring at the chart and it would present an opportunity. I would take it, even though I shouldn't have. So, um, yeah, that's been resolved by essentially, like I said, I have to say, I, my friends think I'm sort of going to turn into some sort of long bearded, long haired sort of guru type, but I use the words like energy and a lot of things like that now, which gets a bit more woo. But essentially, it's just getting the stuff that comes in, like from the real world, gets internalized. Your brain knows it can't control the outside world, so it formulates a new world within your head that it tries to control. But getting to the realization that none of this has got anything to do with me. Like, I have no idea why the US dollar yen is going sideways from the last few days. I can assume that it's waiting for NFP on Friday, but I've got no idea where it's going to go out of this range. I can't control it, and it's not against me, I guess. Like, being like removed from it and just being aware of the markets and the thoughts that I receive and the emotions. A lot of it was, an emotional sort of reaction. I think you'd be like, oh, I really need to make that money back, or I need to do this. I'm now sitting, I guess, in a sort of place where I can observe the thoughts and I'm aware of the feelings, and I can catch myself a lot quicker. Like I said, like yesterday, I was dreaming about the money I was going to spend at the end of December. And that might have in the past caused me to push to like, oh, I'll move my stop higher, because I really do think the dollar yen's going to come down today, even though it's like rallying hard. So like, I'm more conscious of those thoughts because my brain has been very unreliable. Like, some of the decisions it's made has, like I said, like been terrible, and I don't trust it. So I guess that's why I'm more mechanical and more like I've got the sort of matrix on my spreadsheet now, and if it shines green, it's a buy, and if it doesn't, it's a sell. So yeah, being more mechanical, having a spreadsheet, waiting for things to align. But I think the fundamental sort of thing is being conscious of the thoughts and the emotions as well, because over the years they've really done me in with trading. Mainly because I want to do well. Like, I want to be right. I'd like to be right. I'm now, like I said probably earlier, I'm actually trying to be proven wrong, because it feels like, when something feels a bit too easy, it's just like, it's like almost like the Apple trade, like back in 2010 or whatever it was, 2008. I made money quite quickly, so I thought it was easy. Now I know trading's not easy. Like, trading's super hard. That's a lie. You can buy and sell really easily, but consistently doing it well is not easy. It's simple. It's not easy.
Yeah.
But
That's awesome. Thank you for sharing that.
I think that's But all the other sort of problems have been FOMO, and a lot of it's just that feeling of lack of the opposite of doubt is faith. So how did I get faith? I got faith by being burnt enough times to do the thing I'm supposed to do. Having that sort of self-doubt, like I wasn't an economist, I wasn't trained by institutional people. Like, have I been taught the right stuff? Does this work long term? It's always a doubt. So hence why I did a 2-year forward test from October 2022 to May 2024. Like, I wanted it to prove itself. So I have faith in my abilities and my system now, which is nice. Before it was always a bit more, oh, it's working, and then I get too confident, and then there'll be a fail. So it'd be that classic P&L swing.
Yeah.
The amount of people I talk to now that are like essentially bordering on gambling, and I know it's because they don't trust themselves or their system. So you can have one or the other, but you kind of need both.
Yeah. You kind of touched on a point when you said you were at traffic lights, and the way you think about risk has kind of changed. When you brought up gamblers there, I think it's a big transition when you start to think about risk, or you start to kind of do that classic thinking probabilities. I I think that's a big
Mm.
push from going from a gambler into a trader, is because as soon as you start thinking like that, the gambling mentality, it's very hard to justify if you really think in probabilities. It's like, well, if you think in probabilities and you have an idea of your edge, some of the stuff a gambler would do doesn't make any sense anymore. Um,
No, no. And yeah, it really doesn't make sense. And yeah, being aware of my thoughts as such, like just being just aware of what I'm capable of, what my brain's capable
mm,
of, what sort of nonsense it can like push up. It's nice, I'm probably at an age, maybe I've matured to a certain extent, but yeah, a lot of it has been, I used to do think and get rich and
Napoleon Hill. Yeah.
affirmations and yeah, all that stuff. I've done all the self-help books. I've done all the trading books. I've yeah, ICT through the nose. Like, she's just like looking for what is the truth, and the truth is like, yeah, you can only control your entry and your risk. That's yeah. The rest of it is kind of not. It's not against you. It's just yeah, get the probabilities in your favor, and I guess that's what I'm trying to do more the last 4 or 5 years. I feel like I've learned all the techniques. I've seen all the BS in the
Mm,
markets, and now it's trying to put all of that good stuff, like take all the good stuff, and yeah, make my own.
mm. Yeah, that's what I love about when you talk about your process. So many different ideas all kind of culminating together as a fundamental idea, which is quite original to you. There's the classic trend following, but then there's the kind of finessing entries. It's kind of like a scientist putting something together, and obviously that's why you probably have so much faith in it, right? Because it's your creation, and you forward tested it for 2 years, which helps. Right?
Yeah, yeah, like I've written books like how to trade, and they're on my desktop, and I'm never going to publish them
Okay.
because there's just no point. As soon as you say to someone, "This is how to trade," they will take it and they will try and make it better
Mm,
because that's what everyone does. Like, I really do believe you have to sort of, yeah, sort of. And there's everything's on the internet as well. It's all for free. Like all the self-help stuff you can get for free. All the techniques for getting in and out of a market, it's there. The information there. It's just I never knew who to trust. As in, I never knew who was telling me a good thing. So I had to try it all. And now, like, yeah, I'm lucky because I can pull on all those different threads and then build something.
mm,
And yeah, and as long as the P&L, yeah, I don't think I've made any silly mistakes like I used to in a year or so now. I did try to go, and I did try a euro dollar trade on this Darwinex account, and it failed quite quickly. So I figured that's never happening again
mm.
because, like I said, that was purely technical rather than fundamental and
Is
technical.
it?
And I
Mm,
want to market myself as I want to market this strategy as fundamental and technical, and hopefully get it to a point where it's automated as well. So I am fully removed. Like if I could get out of my way 100%, that'd be amazing.
mm. Yeah.
Yeah.
Actually, I the second person in the last 2 weeks that has kind of had that specific phrase, getting out of my own way. I had a guy called Travis Wu on, really interesting guy, very different. He lives in Hawaii, lives an alternative lifestyle. He's got long dreadlocks. He never wears a top, but he's a big crypto trader and
Mm.
was back through the highs and lows of it. But he has come to that conclusion of algorithmic trading. He's got great ideas, but as we talk about that awareness and the challenges and the emotions that trading brings up, he says he does get in his own way too much. So I think, yeah, you're not the only one that progresses towards that idea. Whereas if you can get it into that system, then system's going to
Yeah.
do what it's told, right? If you can,
Yeah. And I think the system's robust.
mm,
Like I said, I've only really seen it in a bull market. I've got ideas of what it looks like in a bear market, but I want to sort of see it front and center on my charts and in my P&L. But I think systematic trading, this type of trend following thing, would be awesome. And then it gives me scope to then work with people to maybe work out how to hedge for when the market does sort of change paradigm and things like that. I'd love to be able to hedge properly. Never been able to do it successfully. I'd like to work out whether scaling in or scaling out, because the idea is to trade a lot more money. I want to go from hundreds of thousands to millions, and obviously that has issues with liquidity, which I've never faced. So I would like to be systematic and algorithmic, and to utilize all those sort of skills that other people have and can do really well. To sort of scale up, because everyone I talk to at the moment says, "Oh, we need you to trade a certain size account so we can see the liquidity sort of issues." I'm trading one of the most liquid assets you can. I could do it. I could do it on the futures, or I could do it on CFDs. I can do it. It's pretty mechanical, and the S&P 500 is definitely a lot more liquid than the NAS. And I don't trade the NAS, so I think I've got a good strategy in a good market as well. There's tons of liquidity, so I think this is going to scale. I just need to work with someone that can get me to that next place, really. Because like I said, I've tried in the past to automate things, and working with people that do code and stuff like that was really interesting, because I'd say, "Oh, I need it to do this and this and this." They go, "Okay, well, how do we get from your first this to the next this?" It's like, "Oh, you just do it." He goes, "No, we need to tell the computer." It's like, "Oh, right, okay." So just okay. So then, having that sort of idea of what a systematic program requires, everything detailed, that has helped me sort of develop strategies in the past as well. Because if I can't mentally code it or write it down point by point and then it repeat over and over, it's no good to me. But my brain's pretty good at, like I said, the patterns and stuff, so I see the thing developing, and I think I think it's all good stuff.
So I don't know if you know Rob Carver. He wrote the book Leverage Trading. He was probably the best systematic trader I spoke to, but I found his books quite helpful in that respect. They make you think like a computer, in the simplest form. Because I work with IT tech delivery all day long, so I'm always working with. You can say how dumb computers are. How much you have to really. It is black and white. That's the best way of everything is black and white. So it has to have an answer. If it doesn't have an answer, it's a bug. But
definitely.
I wanted to touch on your prop firm before because we've this is going to be by a mile my longest podcast, which I think is great, because I think the longer we go on, the more, I don't know, I just think we go comfortably into rabbit holes that not worrying about time, I think, is got a higher level of kind of conversation, in my opinion. So I've really enjoyed it. But how did you go? You've gone from into kind of being a successful trader, but along that journey, you've started your own prop firm as well.
All right. So the money's not mine. The algorithm that makes the money on the trades isn't mine. So what happened is a company came to me and said, would I be interested in their sort of trade challenge? And I said, yes. This was years ago.
Right.
So years and years and years ago, all the way through COVID, we tried to work out how to market it, how to make it work, how to get traders to trade it, how to make the actual thing systematically work. And the reason I've said yes is because I believe, and unfortunately it's still to be proven, but I think it's the best way for traders to trade. It's requiring asymmetric trades, so you risk less than you can win. You have to hold the position to take profit rather than take those sort of initial 5 pips, 10 pips, scaling out partials and things like that. Because as I was learning, the trend following, you set a trade, you'd take a partial, and then the next trade you'd take a full stop loss. So you're like net behind, even though you'd like won one, lost one. You didn't fully reach the the R, 2R. You only took half an R, and then you lost an R. So I think the prop firm itself is the best way to trade. For the last couple of years, we didn't charge anybody any money to do it. We wanted like zero barriers to entry. We just wanted to find really good traders. There isn't any. It's just like everyone comes in, everyone says they're going to do this, this, and this, and this. They're not going to scalp. They're not going to, fingers crossed, there will be some great traders. There's definitely some potential, and they're doing well, but it takes a long time as well. You have to do 125 trades is like the challenge, if you like, to actually get through 125 trades. You have to hit 55% of those trades as winners. So that's 69 trades plus. If you do that, the payout's 150 grand, well, $150,000 like cash. And I wish I could say that the engine behind all of that makes your trades build up to that sort of money was mine, but it's not. But I am like a small percentage of that company.
Okay.
But I am the sort of I'm the person that's supposed to find the traders, be there for them when they need someone to talk to, onboard them and things like that. It's just hard because everybody wants to. No one can sort of see the benefits of like holding for the 2R, essentially. And I'm hoping that the ones that do stick with it but don't quite make it, there's been a few really good traders, but they just never quite got across the threshold. I think they're going to take that experience into their actual trading, and then I think it will be like a foundation for them for that. If they're a break-even trader now, they'll be making money very soon because as long as they have those sort of asymmetric trades, then they'll be fine. You don't have to win that many to stay break even or make money. So that's kind of where we're at. I think it's a great idea. I really do. And I think, again, I wish it was algorithmic. I think there'd be some algorithmic traders that could do it, but just the way it's all set up, it's discretionary because you have to go through our or execution only platform, and lots of traders will use the excuse that they don't have a chart or like a precise chart to price feed sort of correlation. Sometimes the liquidity provider that we're using has a slightly different price for dollar yen than the one that's on the chart.
Okay.
For I don't know. So there's lots of excuses that it doesn't matter what I tell them. I say, look, just work out the difference between the two, and then just adjust. Like just do it, just write it down. Like you can do it. But most of the problems are traders use the minimum stop loss, which is 25 pips. They can go all the way to 125 pips, but they try and keep it to 25 pips so they don't have to have such a long wait for the take profit.
Right.
But if they did that whole, everyone sort of says, oh, this isn't a get rich quick sort of job. Everybody wants to get rich real quick. They just do. Like even if we've like they can't see their position size, all they can see is buy and sell and stop loss. The take profit is automatic, really, because it's always a 2-to-1 profit to risk. So we try and get rid of all the things that used to make me sweat when I was trading other people's money. All those sort of emotional, like, oh, I can see the P&L going up, or I can see, all of that sort of psychological sort of stuff has been removed. And the idea is, if people just didn't care, if they just said the market is trending higher, buy, give it a big stop loss, and just wait for the trade to play out and not look at it, I swear like 80% of them would have made money by now.
Mm.
But no, they have to sort of do some sort of fiddling about. So, and yeah, they don't look at ATR maybe. So that, you know, or they try and scalp gold and Nasdaq, and the system's really not set up for that. They'll look for the most volatile asset, and then they'll try and get in and out. Like they'll get to void 100 times, and then maybe a loss and a win. It's just like, well, that's a lot of effort for nothing, really.
Yeah.
So,
yeah,
I personally think it's, and I'm trying not to sound like I'm bigging up my own thing, but yeah, it's been around for a few years, quite a few years now, and I still think it's the best challenge type of trading thing out there. And the idea is like once you get your payout, you get the 150k, then you'll be asked, you know, by the larger sort of firm to sort of set up your own desk, you know, get traders to do what you did to get the payout.
Mm-hmm.
You know, become that thing where you can start to sort of encourage traders to do the right thing. And yeah, just like I said, I think maybe I've been like a bad teacher. You know, it's hard to know what people really need to trade well because everyone's different. But yeah, I really wanted to find out the hundreds of traders that we've basically had on, that none of them have been able to like really sort of shine, which is a shame. I thought it'd be quite easy, but yeah, maybe we need thousands of traders to find the one.
Yeah, you would. Well, I guess well, the stats are the stats, but you would think the stats would at least bring back maybe in a sample of 100 traders that one or two traders that could.
Yeah, out of the guys that, you know, I thought were doing really well, most of them are like a 30 to 40% win rate, which is great. You know, they're break-even traders, and maybe they're pushing too hard. Like one guy, he works for like institutional. He's an institutional type person, or maybe someone like yourself. You know, works with a bank or something, and yeah, he's always like doing the oddest trades. I'm like, why would you do that? And he does it over and over again. Like, you know, you'll see the market coming down, he'll buy at the bottom. And it's like, you've never picked the bottom and you've never picked the top. It's like, but he's done it for hundreds of trades now. He's like on his second go around.
He's still
like, why don't you
trying
just,
to.
yeah, like just switch what you do.
Yeah.
Like sell lower and then buy lower, and then yeah, or buy high and sell higher.
Yeah.
It's weird, but I thought he was like, he and a few others were like, okay, you guys are definitely going to be able to nail this because you come from a better background than you say 70% of the other traders. But no, even the guys that I think should do it haven't really shone.
Yeah.
But yeah,
Well, that's that.
They're still trying.
Yeah, I'd say that's that kind of bias in I think it's just a human bias that you think because someone's good at something else that they'll be good at this too. And I think trading is just that perfect example where that's never the case. Sometimes being the smartest guy in the room is, depending on how strong you feel about your opinions, could be the least profitable guy. But yeah, I think
yeah.
So I was just going to say when you were saying, he's trying to buy the bottom. I think after I spoke to Jason Shapiro, I had the thought of, can I just channel my unprofitable self, from say a year or two ago? What would he do right now? And just do the opposite. That was what came to mind with that guy. It's like, if you just whatever you're about to do with that bottom, just do the opposite, and you're going to make money. So
just it really doesn't work. Yeah, it's weird, isn't it? But yeah, I was going to say, like, yeah, I had hopes for this one guy recently, and yeah, I really wanted to. Well, there's been a few that I've really wanted to help, but yeah, I was hoping to sort of do like a whole series where we start from zero and then we just work our way through, like building a trading plan, executing the plan, seeing if the plan worked, and after 100 trades or 125 trades, sorry, you've got a good idea if your plan works, and then you can go back and go, well, yeah, say 45% of the trades went. What happened to the others? How can we sort of adjust? and just having that data set
Mm.
and building on that data set and then going again.
Yeah.
But yeah, unfortunately, that didn't pan out because yeah, he and his wife were going to break up or something through trading.
Oh,
So
well.
I've lost friends through trading. I've lost, well, yeah, money's the cheapest thing to lose, really. Like I've lost friends, I've lost, yeah, business contacts, all sorts. It's just I've had to sue someone before. Like trading's like a
Oh,
hard,
well.
hard place to be. Yeah, it's just, yeah, it's weird, isn't it?
Mm.
Like it should be like where everyone's really happy and making money, but I think if everyone's losing, it gets really sort of tense.
Yeah. Yeah,
So
that's
yeah,
interesting because
yeah,
I mean, it was back. A couple of people like that have given that raw kind of feedback, and that guy Travis was one. His line was, his net worth went from $400 to $400,000, and his life got significantly worse. But that's not
yeah,
it's not
yeah,
what you see when you buy the course. You have the dream of, I don't know, I'm going to be. People have different dreams. I'll be free, or I'll have an independent income or a regular private income. Won't need to work, 9 to 5.
yeah,
In reality, some of the guys that make it, they end up in a wildly different place or with a wildly different outcome than they thought initially, right?
yeah, yeah. No, definitely. Like the amount. I mean, have you ever fallen asleep with your finger on the mouse button and
No,
then
no,
bought or
I
sold? Like,
haven't.
no, like I've the idea of trading was to live the dream of being free and just to do whatever I wanted. But then you sort of find yourself 8 hours in, or 10 hours in, or 12 hours in, or maybe 14 hours in, looking at the charts, nodding off and clicking buy or sell. It's just like, all right, this is not the
Yeah,
dream. This is not where I'm supposed to be. Like,
yeah,
and trend following is good because you can have other ideas and do other
mm,
things, and you're supposed to come back at the end of the day and just check your position. So that definitely
yeah,
works. But is yeah, the markets are weird. They're full of real weird people.
mm,
Um, and like I said, I'd hope to find more friends than I lose, but it's not really turning out that way at the moment. It's just weird.
mm. Yeah. I think because I think one thing trading has kind of taught me is the ability to just accept that my initial idea isn't actually correct, and if someone's idea is better, then move on. You like that Peter Brandt saying, "Strong opinions loosely held," right? And I think
Yeah,
someone like you does represent an opinion on what they think is right, or and a willingness to question people when you think they're wrong. Sometimes I can rub people up the wrong way, I guess, but again, for me, if they're decent traders, you know, you would think they have an openness. If what you mean is you've lost friends to your opinions about trading, then that would be what I would say.
yeah. There's definitely that element. Like, I'm essentially running a science experiment on my actual strategy. Now I come up with a hypothesis.
Mm,
I'm testing the hypothesis. After a couple of years of trading, hopefully I'll be able to sort of demonstrate whether it worked or not. You know, maybe I'll have to make adjustments. I don't know. Um, but yeah, so that's the experiment, and I'm running, and it seems to be working.
mhm,
But yeah, and that does obviously come with ideas, and I challenge other people's ideology and dogma because they all say something, and I'd want them to sort of push back and tell me where I'm wrong, rather than that I'm just stupid. If they say no, this is this, and this will happen, rather than you know nothing. It's like, well, I'm just going to badger you now for the rest of your life, but until you block me. But yeah, so I lost them that way. But then the other sort of side of losing people is um you can like have a relationship with someone in the markets. You can be helping each other, but when it gets down to money brings out the worst in humans as well. So you know if money disappears, then friends disappear. If that type of
mm.
thing. So people get really odd around money,
Yeah.
which is which is a shame.
Mm. I've heard people talk about managing other people's money, and that being that it, or maybe I was reading it I think in the Unknown Market Wizards books. I don't remember who it was, but talked kind of about the challenge they had of taking on other people's money and how that played on his psychology. Because I guess, yeah, back to what you said, it's really true. It's like when someone's, is someone who they are when they're just having a nice, easy conversation, or when they're under pressure. Because it's the same person, but it's a different circumstance. So
Yeah,
someone with your money and without your money, it's the same person, but you put them in a different situation, and a different person comes out of them. You know what I mean?
yeah, yeah, definitely. And like, yeah, I've met enough people now that have said, okay, you can have this money, or I can give you this opportunity. And then yeah, when um, like the most recent guy who gave me like 30K, it's just all very lackadaisical type of thing, and I was just like, this just smells like BS. So I was like, well, it's no skin off my nose. I'll do some trades for you. And then he's actually turned out to be more legit than the people that I thought were legit before. So
Yeah,
yeah, it's you can get contracts, you can do all sorts of things, you can like invoice people, you can do everything right, and then yeah, I've just my view of humans around this industry is greatly. So it just sort of opened my eyes to like what people can get like, and yeah, maybe I'm a bit more cynical now because I've seen a few people change or just lie or whatever when there's no need either. So
mm,
yeah,
yeah,
it's just it is funny, but yeah, it's different pressures. You don't know what's going on in other people's heads, or what they've had done to them before. So,
mm,
but yeah,
true.
I would definitely recommend not spending money unless you really have to in this market. Yeah,
In terms of on
it's
education, is it,
just
or
I just I mean yeah, like so like I said, back in the day, there was that sort of business model of pay to play, pay to
mm,
trade. You pay to get trained. They train you, then you essentially get booted off, quite quickly.
yeah,
There's that thing that has kind of gone the the gamification of resets. I think that's really bad. Um,
okay,
but also like you can be working for people in the industry, and yeah, like as soon as money disappears, yeah, it doesn't matter how much of a history you've got with that person or that company, they just drop you, don't they ghost you, don't pay you. It's just
no,
it's hard because obviously it's global as well. So you could be working with someone in Canada, and yeah, maybe they're. I was going to describe the whole situation then, but yeah, maybe something doesn't happen their end, and then that has a knock-on effect, and yeah, it's just the money. It's hard to get the money, so you've done a lot of stuff, and yeah, for no reward, which is weird. But
mm. Yeah, that's interesting. Um, so obviously, it's happened to you in the past. Is it that you've worked with people, and I guess, were you providing analysis, or you were trading for them, or
yeah, so like no, it's more yeah the trading side, they just pull your account, so that's done, and
right?
they just say, well, you've broken that rule, so that's one thing. But yeah, if you do an analysis or you provide a service, like whether it be based around analysis, essentially, like or education materials, yeah, it's just trying to get people that you think are good people, and they are good people. It's just when it gets to money and somewhere upstream the money gets cut, then people just get weird.
Mm,
They you, what you thought was a friend becomes, oh, it's just an acquaintance or an associate. So
yeah,
it's a shame, but then that's in every industry, I'd imagine. But I think because it's so directly linked to money, everything's
mm,
money orientated in this market or this world. Money's not a great thing for some humans,
yeah,
bringing the best out in them. So
yeah. I was just going to say that it doesn't bring the best out of everyone. It's fair to say, I think.
yeah,
Yeah.
yeah, I looked through Forex Factory, and yeah, one of my posts is I want to give away all my profits. I set up a whole thing because I think cynically I was thinking, well, if I can give them all away, I must have made tons,
Yeah,
which would be awesome.
yeah,
But yeah, it would be a nice thing to sort of. put some positive stuff back into this sort of retail space. I'd love to be able to do that. So I'm just trying to come up with ways to do that as well.
Yeah.
But yeah, the first thing to do is make some money. So
Yeah.
you can't do anything with it without it.
Yeah. Yeah. I think you're probably the second person I've heard with that message, which isn't a lot of people considering how many people are involved in the trading world that I'm aware of. Because I think Jason Shapiro was also doing that with his mentorship. All the money goes to charity, and he's just giving away his kind of process in his subscription, and he has the same philosophy that I think it's kind of like, I think yours is more focused on maybe giving something back or cleaning up the industry a little bit, giving something positive to the industry. His is kind of like do something good and maybe, give something good to the world and maybe something good will happen to you type philosophy.
Yeah. No, I'm a big believer in, there's enough for everyone to go around. It's just, I think if you can help, you should help. So maybe I've helped too much, like with my time and stuff in the past. And like I said, that's why I feel like maybe I'm a bad teacher, because even though that time was spent, the guys didn't, as far as I know, benefit as I hoped they would. But it'd be cool to sort of get some of this money flowing back downstream rather than it all going up to the 1%ers. Yeah, that'd be So I'd always help if I could. I think there's definitely enough money out there. There's like trillions, quadrillions.
Yeah. You're tracking it every day, right? In the flows. So.
Yeah. When everyone goes on about 36 trillion in debt, I always think, well, that's 36 trillion of untaxed dollars. So that's 36 trillion in the global economy. I think, that I just want a little bit, and I'll distribute it a lot better. So we'll see.
Can you let people know where they can find you online, Neville?
I'd hope they come to LinkedIn, and I'd hope they come and tell me how wrong I am so I can work on it. Neville Hornsey on LinkedIn, or nev at macrobriefing.com. That's probably the best email, and macro briefing across socials generally. So that's where I am.
Awesome. Well, you are officially the longest podcast I have recorded, and one of my most enjoyable, I have to say. So you've been very generous with your time. I really appreciate it, and I've learned a lot listening to you.
No worries. It's been great talking to you as well, Colin. Thank you so much.